What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method we use and the trading method we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks again to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and the notification buttons as well. That way you are alerted to when we release bonus content or just videos overall. The nightly and weekend videos like tonight's video focus on identifying triggers and targets for trades ranging from scalps and intraday trades to swings and leap trades. So if you want a deeper dive into exactly how we set up our charts, broadening formations, levels of interest and things of that nature, make sure you check out the bonus content on our YouTube page. We dive deeper into a couple of videos. We dive deeper into our charting method. And if you want some more free information about the strat, check out the description of this video. There's a free PDF for you there. So I do encourage you to watch the full video. We do give some good analysis on all time frames aside from just triggers and targets. So with that, let's go ahead and get into today's agenda. We'll first recap the price action from today, Monday, December 8th. Then we'll zoom out like we always do and look at the week, month, quarter, and year. Then we'll zoom back in to set the 4-hour markers and the triggers and targets for Tuesday, December 9th, along with a quick review of the triggers and targets for the week, month, quarter, and year. So let's take a look at today's intraday price action, and you can see it was flat overall, but there was opportunities both to the downside and upside to make a little bit of money today. So, almost an inside day, just barely poked above previous high day at the beginning of the day, and then a little bit in the middle of the day. So almost an inside day, and that tells you, what kind of day we had. You can see, first we'll talk about the repeatable strategy that we use. It is taking the 4-hour markers, that's the previous high day, previous low day, overnight high, overnight low, and the opening print, and basically establishing a method to profit from the price action between those markers, right? So our general rule is look for higher lows at or above opening print to get into calls, and look for lower highs at or below opening print to get into puts. So today we had, kind of an interesting morning, right? We opened up and pushed straight up. We happened to sell our the call swings that we had not at open, but basically in the morning, right? Once we saw the pop, we went ahead and set a stop to cover the profits. We did, I don't want to say we top ticked it, but we were pretty fortunate to set the stop when we did, because, we'd only had about 5 minutes of upside action to, kind of assess the situation and determine what we were going to do. One of the reasons we did sell, let's bring up, if we look at the internals, let's just make the tick bigger first, since it's the quickest moving internal, right? You could see right from open, it dropped to zero line, hung around zero line, tried to get a little bit of pop, push down, and you can see majority of the action, especially in the morning, was below the zero line on the tick, right? So that's why we knew, we wanted to go ahead and set our stop. If we look at the ADQD, which is a measure of breadth, obviously the whole market opened a little bit up, or at least the tech side did, and again, it was immediately falling. So that's why we set our stops early in the morning, and we're able to capitalize on those. Once we saw this basically a soft higher low here in the lower low, we were thinking, okay, we've hit this previous high day and we're failing it, right? Kind of like a look above and fail. It just shows that, the bulls weren't able to push up further, right? We got that initial push in the morning, but we started to push down. So we took a nuanced approach to this. It's not something that we suggest unless you are familiar with this strategy and you've gone through it multiple times and you've had success and you can see these nuances. But once you see that we're failing that previous high day, we got the soft higher low, soft higher low, lower low. Then we got a solid higher low, a concrete higher low, right? It wasn't part of a engulfing candle or a 3 candle. And once we saw that break and be set as a hard higher low, lower high, we went ahead and entered puts here, right? Immediately got some, gratitude from that. We dropped down, went below opening print, but we did push back up. We held on to them. We ended up making a lower high here, and then we pushed down. Now we hit this 46.79 that we've been talking about for weeks, right? We've talked about how that is resistance and trying to be turned into support, right? So if we go back here, let's just pull out the day chart, right? If we're looking at the day chart, it was resistance. Great, we gapped up above it, but then sucked back to it, tried to get a bounce off of it, but fell back below. Resistance, somewhat resistance here too. So that's 46.79. We've talked about that a lot in the past. If you're not familiar with this channel, that is last year's 50% level, right? So trying to get back up into the upper half of the 2024 price action. And it's been a struggle so far this year. So we want to see what was happening there. So we went ahead and got out of our puts at that point because we did get a lower high. Oops, where's my other chart? There we go. Yeah, here we go. We got a lower high followed by a higher high, and then it went, broke this lower high. So we had our stop set just above this. So we stopped out here. Decent move from, what was this, about 48 flat to just above 47, so about 47.20, 25 maybe. So a decent move. Made some pretty good profit. We had multiple contracts right at the money, so we were able to profit there. Now we thought that we were actually going to get a better bounce than we did off of that level, but we bounced, made that higher low, pushed up, but then we rejected basically off of the opening print level and went back down. So we were thinking, okay, maybe we do need to re-enter. So looking for an entry, not just on the 5 minute, we flip to the 15 minute and the 1 hour and see what those are looking like. So we hadn't quite entered puts again yet on this lower high on the 5 minute. We wanted to see how this 46.79 was going to be tested again. We were really looking for a break through that and then maybe a pushback up for a lower high underneath to show it as resistance again instead of support. And we probably would have entered more puts to the downside. But we saw this level get tested again and bounce. And, from the 1 hour perspective, this was a higher low. So we went ahead and took, again, another nuanced approach, buying calls under opening print, just like we were buying puts over opening print, because we knew today, or you could see basically today was going to be a choppy day once we got the bounce off of last year's 50% and the rejection off of, or the pullback off of the opening high, right? So bulls weren't able to continue to push up. Bears weren't able to continue to push down. At that point, okay, we're probably going to have a choppy day. So we have a range here, right? Previous high day essentially, and last year's 50% level. So, what's the harm in taking a higher low here and trying to take it back up to the top of the range? Get rid of most of the position, maybe leave a couple around as runners. No harm there. Risk to reward is there, right? As we've already established an intraday range. So after the retest of this 46.79 and the bounce, we went ahead and took this soft higher low here. Not something we normally suggest, but you could have took this more solid higher low here. But we went ahead and took this soft higher low, entered calls once we broke above this candle, right? So with this 2-up candle, we went ahead and entered, pushed up, got the higher low, higher high, pushed up, and we sold a majority of our position back at previous high a day. Once we got this lower high, we didn't even really mess around trying to hang on to those any longer. So we got this lower high. We gave it to making a lower low before we'd sell it. So we did end up breaking even on the runners that we left, but no big deal. We already profited from the ones that we released at the top of the range. And then you can see we had just basically sideways action for the rest of the day. Kind of a squeeze up. We've got the Fed on Wednesday with their rate decision. So my guess is we're probably going to have another choppy day tomorrow, maybe one move in the morning, and then chop the rest of the day into the afternoon. And then Wednesday morning probably have another one move maybe, and then just kind of wait, for the rate decision to be announced. So, maybe scalping, especially if you're a scalper, this is good news for you. It will, at least in my opinion. And today was probably a good day for you. So not the greatest day for trend traders, especially if you trade more of like a 4 hour, 1 day, 1 week trend type of thing. This was definitely an intraday, very scalp. You had a trend to the downside, but it was a scalping trend. You had a trend to the upside, scalping trend. You could have got a little bit of money here too, but if you play by the rules of higher lows and lower highs, it would have got minimal profit out of that, and then sideways action. So not a whole lot more to speak of, but after the first two moves that we got into, again, if you got this downside as well, maybe even the squeeze at the end, I applaud you for that. But we were basically just trying to look and get set up for tomorrow. So I was actually looking to possibly get some puts to swing into tomorrow if we closed below opening print, but with that squeeze at the end of the day, we decided just leave it alone. We'll wait till tomorrow and to take a look at things. From the 1 hour, I just want to bring this up real quick because we did try to make a downtrend, but the other reason why we weren't too keen on taking puts overnight is because I'll try to make that bigger for those on the phone. We did get a lower high on the 1 hour, right? This 2 down locked this in as a lower high, but it was coming after a higher low. So all that really means is consolidation, right? Higher low, lower high. We're just consolidating, getting tighter and tighter. So nothing really triggering, no real trigger happening in order to cause us to want to swing puts overnight. If we would have made this lower high and instead of these 2 green candles pushed up, we went and made this lower low. Like I said, we were kind of looking for something that would have poked below this 46.79, maybe get a little bit of push up to get a retest that level from the bottom side and then reject to go back to the downside, targeting previous low day and this gap close really. But that's again why we didn't take any puts overnight. Again, at the same time, there were no triggers to take swing any new calls overnight, right? We have our existing swings, but that other than that, there's no real reason to, right? Yes, we got this higher low, this 2 up. Locked this in as a higher low, but it was coming from a lower high. So again, consolidation. So that's what we saw there. On the 4 hour chart, we made a higher high, right? The second 4 hour of Friday ended up being a higher low, like we were talking about. We closed above that gap, or we left a gap essentially, basically showing the bears couldn't even close that gap from overnight Thursday night to Friday morning. So not a lot of momentum to the downside. We were looking for this to be a higher low. We got that earlier in the morning with the higher low, higher high, but it fizzled out. So nothing to really urge us to swing something new overnight to the upside. Again, we're running into this the fib extension from the 150 fib extension of the October range, and this weekly broadening formation where those intersect. So good place to see possible resistance. Again, doesn't mean we're going to reject and fall back down into the range, but to see some sideways action, shouldn't be a surprise. All right. Looking at the day, we got another 2 up. So from a day-to-day perspective, let's just bring this up. From a day-to-day perspective, right, we're just 2 up, 2 up, 2 up, 2 up, 2 up. Yeah, we did an inside day and then 2 up, 2 up. But you can see how these 2 ups have more body. This was almost like a hangman doji. This is just another basically doji, a little bit fatter than a doji, but it just showing indecision, slow push to the upside while, amidst that indecision. So again, another reason why we're not just jumping head over heels to get into new calls, right? That's how it looks from the day perspective. Let's go ahead and zoom out to the week. All right. And we can see, again, we set that higher low, 3 weeks ago now. We're really just looking for this higher high. If we can push above this 50.19 and then the 50.76, make that higher high. We've locked this in as a higher low, higher high, continuing the uptrend on the week perspective. Just trying to go into the end of the year with as much momentum as possible. Try and hit this Santa Claus rally at the end of the month, beginning of January, to continue that momentum to the upside. But again, from the week perspective, nothing to worry about. One thing we do want to continue to watch for, however, it's not a worry, it's just a watch. We just want to make sure that we do make that higher high. If we end up making a lower high and start turning back to the downside, All right, now we've got to watch out. Do we go back to this 28, 29 level and actually break through it and make a lower low? Because if that's the case, we come from a lower high, making a lower low. That's the start of a downtrend. So not something we want to see, not something that I'm calling for at all, but it is something that we need to continue to, keep an eye on. Hopefully it shouldn't be too long and we get that higher high. We've got to get that higher high. Again, even if we don't pull back to make a lower low and start a downtrend, it could signal consolidation, right? We were just talking about that on the 5, 15 minute, 1 hour time frame. We've made, yes, a higher high, but if we make a lower high and start to push down, it's not the end of the world, because we are coming from a higher low, and it could just signal some consolidation. If you look at this 11 weeks right here that we had from June to September, where that was that 11 weeks of $24 to $28 trading, right? We could have another sideways range, just with a larger range than we did back here. So again, nothing breaking down on the week. Same thing from the month perspective. Again, and just getting closer and closer to try and make that 2 up on the month to lock last month in as a higher low. Right, we had that push down, but this big wick here showing, the bears couldn't hold it. The bulls did push back up, didn't turn the candle back green or anything like that, but basically gave a more hammerish look to the candle, and was able to buy that back up. Now again, we're back up towards the top of the previous month's candle, looking to break above it to trigger this 2 down, 2 up reversal. Now, not a lot of magnitude of it there. The magnitude of that move is just the 2 up to the left of the 2 down. So not a lot there. But again, it goes to, we've got to reach that level and make a higher high so that we can lock this in as a higher low on the month perspective, because we're not as lucky on the month, right? We had this downtrend. We had the lower high, lower low, lower low, lower low. So we had that downtrend, and we've bounced. We have what appears to be an uptrend, but this, again, this is a soft higher low here. I don't like to count these, I don't give this as much weight as if this was 2 up, 2 down, then 2 up again. So we do have to just kind of keep an eye on this if we don't make this higher high here, because we could trickle back down here to make a higher low on the month perspective. But again, not calling for that. I don't see it coming anytime soon, but it's something that we've got to be aware of. So just want to continue to push up. We go higher than last month's high. We triggered the 2 down, 2 up reversal, and we're back in business, starting a new uptrend. If we go to the quarter, right, same type of thing. We've got this 1 combo 2 down, combo 2 up reversal strat going. Now it is coming from a lower low on the quarter's perspective. So this 70.08 magnitude is very important from the quarter perspective, quarter and beyond, really, quarter and year. Yes, we are in this 1 combo 2 down, combo 2 up. The magnitude of that move is 70.08. But the reason why that is so important is because we need to make the higher high to, at the very least, make this a broadening formation. We don't need a lower high here and a push back down, because that would then start a downtrend, right? So we've got lower low, lower high. If we push back down, it's possibly trying to make a lower low, and that's not what anybody would want. Well, maybe if you're a bear, but long-term holders or medium-term holders, SOXL isn't something you're going to hold for life, but longer than just scalping perspective, you do want to see that continued push up. So again, nothing to worry about, but just stuff to keep your eye on. And then from the year perspective, right, we had the 1 2 up, 2 down. We made a higher low, trying to push up, finish at the top of this candle, so that beginning of next year, we have a higher percentage chance of going 2 up early and giving us this 2 down, 2 up reversal, which has, again, this 70.08, just like on the quarter. So we've talked about when the 1 2 down, 2 up triggered on the quarter, that it would take more than a quarter to reach that 70.08. But we're on our way, and the main thing we're doing right now is trying to turn this last year's 50% level into support, right? So still struggling with that a little bit, but that's what we're looking for in the end. All right. So that is our review of today's price action, as well as a zoomed out view. Let's go ahead and set things up for tomorrow's trading, and specifically the repeatable strategy that we use at the beginning of the day Forgot to move these overnight numbers. So let me just move these real quick so that we can do this. All right. So in this view, we have our 4-hour markers. That is previous high day up at the top of the chart. Overnight high here. Of course, overnight high can always change. It can go higher. We won't know until tomorrow morning. Overnight low, again, it can always go higher or lower. We won't know till tomorrow morning. And then we've got previous low a day down here. An honorable mention we have is the week flip, which is 47.46. That's where price opened on Monday. So that is where the week, below that price level, the week is red. Above that price level, the week is green. If you look at the upper left-hand part of the chart here, we've got our time frame continuity indicators, and we can see that the week and the month are green. When we get into the higher time frames, you'll see the years, the quarter and year are green as well. So we've got full time frame continuity to the upside. So flipping that week red takes us out of that full time frame continuity, and takes a little bit more assessment. We're not trending up necessarily. There's probably a little more chop or a little bit more volatility. So those are the main levels that we want to worry about. Now, if we do get, let me get the right tool here. If we do get an open tomorrow, somewhere inside the overnight range, right, then this is where the proven and repeatable strategy comes into play, right? We get our opening print and we watch price. If we push up, maybe we reject off an overnight high and we push back down, but then we get a higher low at or above this opening print level. Then we want to look to get into calls. And then when we get into those calls, the first target is overnight high. Not a lot of magnitude there, depending on where you get the higher low and how good of an entry you get. So maybe you don't let too many contracts go here, if any at all. The second target at that point is the previous high a day. All right. Now, if we get price action, to the downside, maybe we bounce off of the week flip and we push back up, but then we get that lower high at or below opening print. We want to look to get into puts. First target being overnight low, second target being previous low a day. Right now, if price action goes past previous high a day or past previous low a day, we'll get into our notes here in a second, looking at the triggers and targets for the 4-hour time frame and the 1-day time frame and so on. But from more of a scalping perspective, beginning of the day, early entry into the trend type of trading. This is the strategy we use, right? Higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts. You do want to recognize where your major levels are, though, so you don't go too heavy too quick, because last week's high is right here and it was shown as resistance, right? Even if you do get that higher low here, maybe you wait a little bit to go in real heavy on your contracts. Maybe you just get a few here and you make sure you get that push up above overnight high, maybe a higher low at overnight high or above last week's high before maybe adding some more contracts to get to that previous high a day. Same thing to the downside. Once you get in, maybe you do get in heavy here, because the only real major level to the downside that we've got is last year's 50% level. So maybe you do go in a little bit heavier here, and then you use this level here as heavier weight. Maybe you get rid of more contracts than you normally would, or maybe your full position once we get to this level, and reassess how price reacts from there. But again, that's just the proven strategy. Higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts. All right. Let's go to the 4-hour time frame to look at things from that perspective. All right. From the 4-hour time frame, we had a 2 and then a 1 on Monday. So price went higher than the second 4-hour candle of Friday and in Monday's first 4-hour candle, but then that second 4-hour candle of Monday just stalled out, right? We had the doji here for the 2 up in the first 4-hour, and then just an inside candle for the second 4-hour. So things can really go either way, and we've got some decent targets and magnitudes to look for either way. So, if you're looking for a day trade and you're watching that 1-hour time frame, and you can see that something may trigger a higher low or lower high, something like that on the 1 hour that would roll into the 4-hour, kind of domino effect type into the 4-hour, and you want to use the 4-hour chart, we can see we've got the 2-1. If we go if we go below the low of the second 4-hour candle on Monday, that gives us a 2-1, 2 down reversal. Not a lot of magnitude there though. So it triggers at 47.05 and the magnitude is 46.70. So if you were to try and get that move, you got to get a real good entry. As soon as you break below, probably get a decent amount of contracts at the money, in the money, to make a decent amount of money. Otherwise, you're just kind of playing things to the downside. Now, if you break below previous low a day, we've got this gap down here to kind of play with. Do we close the gap tomorrow, especially in the first 4-hour candle? Do we go 1, 2 down to set up a 1, 2 down, 2 up reversal to go to the back to the upside? Possibly. If that's the case, if we do push down and close this gap, we're obviously making a lower low on the 4-hour, but it's coming from a higher high. So we're not making a downtrend. We're just making a broadening formation, right? If we're to come down here, close the gap, maybe wick a little bit below the gap and then bounce and then go back up further, right? We've got this broadening formation that's formed here. So again, nothing to really worry about there, but watch for sideways action if that does happen after the gap fill. Like you said, we got the Fed rate decision on Wednesday. So, like I said, we could get that one move and then just move sideways for the rest of the day in anticipation of Wednesday's announcement, right? So we've got some economic numbers in the morning being released as well before market opens. So that may be what pushes us. We're up right now, and after hours we're up a little bit, but maybe we sink back down right before the market opens due to economic numbers. Who knows? But there is some room to the downside, and we've got some triggers and targets to the downside. Just called those out. We'll go over the hard numbers in the notes here in a second. Let's look at the upside. If we go to the upside, we get a 2-1, 2 up. A little bit more magnitude, right? You would get it with the break of this inside candle. So 48 flat, you would buy it. You would grab a call to go to 48.60. So 60 cents of movement. Again, you would want to have a few contracts at least at the money or in the money to make a decent amount of profit, especially if you're just looking to make a move on that 4-hour chart to magnitude. But again, if you want to see, do we break above previous day high and go back up and test this 4-hour broadening formation again, or do we test last month's high? You can leave some runners, but the magnitude for this move is from the high of this 1 to the high of this 2. So take with that what you want. Let's go to the day. Right, we've got on the day another 2 up, right? We've just been going 2 up, 2 up. Now, we did have the possibility of going 1, 2 up, 2 down today for a reversal, to give us some type of higher low here on the day chart. We don't have a real higher low. Again, like I said, we have this soft higher low from the initial bounce, but no real hard higher low in here. So to the downside, right, if we do go 2-1, 2 down on the day and we go below previous low day and we go fill this gap, if we fill this gap, technically we're triggering a 1 combo 2 up, 2 down. The magnitude for that move is not the low of the 1, but the low of the candle to the left of the 1, actually, right? So pretty decent magnitude on that move if it were to go to the downside. Now we're in this kind of face ripping uptrend, right? So we will have some intermediate targets on the way down with possible bounce points before it were to reach down here to magnitude. But that is the magnitude of the move. 1 combo 2 up, 1 combo 2 up, 2 down. The low of this 2 here is the magnitude of that move. Now to the upside, we would just have some more 2 up continuations, right? You can see we're running into this weekly broadening formation. You can see we popped above it previously, played around for a couple of days before dropping back below it. So could we have similar type of thing where we pop above it, maybe struggle with last month's high, maybe market makers expected move high, the 138.2 fib extension of the April 7th bull flag. We run into resistance there. We could pop back below this weekly broadening formation, right? But again, we're in this uptrend, so there's nothing saying buy puts for a day or longer at this point in time. So that's what we've got from the day chart. Let's go ahead and go to the notes, and we can see for Tuesday, December 9th, we will have 15 trading days left in 2025. The close on Monday, December 9th was 47.99, and we know the open on Monday, December 9th was 47.56, so that gives us our flip level, and these are the flip levels for the week, month, quarter, and year, right? So for the week to go red, we would have to go below 47.56, the month to go red, below that, right? So we know we're full time frame continuity to the upside. We know what the week's expected move is, plus or minus $5.03 from Friday's close price last week. That gives us a range of 51.53 to 41.47. If you're not familiar with the market maker's expected move, make sure you check out our weekend video where we go into detail about how we get that level. It's basically generated from open interest on the options chain for that particular week. But again, we dive deeper into that in the weekend video, so go ahead and check those out if you're not familiar with it. And then again, we talked about our gaps. We know where all those are because we keep those in our notes as well. So those can act as magnets, especially as we get closer to those price levels. We talked about, from a scalping perspective, what we look for in the morning. We look for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. But then we talked about what we look for on the 4-hour chart in the day. If we go to the downside, we talked about how that would give us a 2-1-2 down, triggering at 47.05 with a magnitude of 46.70, so not a lot of magnitude to the downside. But if we do get rolling, we've got 46.30 and 46.10, which is the gap close, as our extended targets. On the other side, if we go to the upside, we get a 2-1-2 up, triggering at 48 flat, giving magnitude of 48.60 and an extended target of 49.06. All right, from the day chart, if we go to the downside, that initially would trigger a 2-1-2 down at 46.70 with a magnitude of 46.30, so not a lot of magnitude there, but at 46.30 that triggers a 1-2 up 2 down that has a magnitude that goes all the way down to 43.15. Now again, we talked about how the uptrend that we're in, 46.70 to 43.15, more than a $3 move. That's a huge move for SOXL. Even for SOXL, you don't see those types of moves, but every so often. Haven't had a huge day lately, so maybe we are in store for that tomorrow. But in case we're not, we've got these intermediate targets of 45.54 and 44.44 on the way down. If we get past that 46.30 but don't quite get to this 43.15, these are where we're looking for bounces, right, or sideways action. Again, to the upside, we would just have a 2-up continuation, triggering at 48.60. Our first target would be 50.19, second target 50.76. And anything past that will roll into our week, week targets, or targets for the week, I should say. Speaking of the week, we won't go back to the charts from here. We've kind of beat the charts to death. The week is green, right? This needs to be a red 3. There we go. To make a red 3, or a bearish engulfing candle, we'd have to get down to 39.46. Don't look like we're going there right now, so won't go too deep into that. We'll go deeper into that if we start to turn around tomorrow or the next day. But to the upside, that 2-up triggered at 48.05. No real magnitude no magnitude for a continuation pattern, but that continuation pattern did put us back into a combo 2 down, combo 2 up from the week perspective, and that does have a magnitude of 50.19. So we are looking for the first target of 50.19 for the week. 50.76, that is the 138.2 fib extension from that April bull flag. So that is our next magnitude, it just happens to line up with our next magnitude. And then we have extended targets listed out here if we really get running this week. All right, on the month, we have triggered the no, we haven't triggered it yet. We're looking for the 2-up. That's the here we go. The magnitude for the week is the trigger for the month. If we reach that trigger for the month, that triggers a 2 down, 2 up. Obviously, the magnitude of that move isn't very much. We talked about that when we were looking at the charts. It's only 50.76, but once we reach that 50.76, then we confirm the uptrend and on the month, and then we've got our extended targets listed out here. On the quarter, we talked about the we didn't talk about the 2 down combo 2 up, which triggered the 1 combo 2 down 2 up, but that is what triggered the 1 combo 2 down combo 2 up, right? We reached this 36.15 that triggered the 1 combo 2 down combo 2 up. Magnitude is 70.08. But again, it's a long way to go. It'll take a little while to get there. So we have these intermediate targets listed between. We already did reach these 2 intermediate targets in October, but we had that pullback in November, so we're just working to get back to those levels and above, right? The year, we talked about how we did trigger the 1 2 up 2 down but we made a higher high, and a higher low, and we're able to reverse price around, making a nice green hammer on the year, and just looking to close as high as we can in that candle to give us the best chance of going 2 up at the beginning of 2026. All right, so there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Tried to jam in as much information as we could without taking up too much of your time, so we hope you enjoyed it. If you did, make sure you give us that thumbs up. Again, it really helps the channel grow. It doesn't cost you anything. We don't charge anything for the channel, so hopefully it's an even exchange, and hopefully you get some good information out of this video. So with that, we'll go ahead and end the video like we normally do. If you're watching this Monday night, make sure you get some good rest tonight, and that way you're refreshed and ready to go on Tuesday morning. If you're watching this Tuesday morning, we hope you got some good rest last night, and we look forward to trading out there with you.